Let's take a look at SoFi, SOFI. Okay, decent close on the day. Stock actually was moving very, very nicely, up 56 cents, 3.5%, $17.46. Obviously, we know we had earnings today, so one of the main levels that we were looking for here was a confirmation of 1750. Okay, you can see that we closed at 1746. Why did we close there? Because we ran right into supply. Look at this yellow line here. This is a supply zone here. Sellers here, there's resistance here, so forth and so forth. We stopped perfectly. All these lines on my chart, they mean something. We don't just stop at them just to stop. There's reasons why. So when we stopped at this supply zone here, what earnings needed to do, that catalyst needed to do, was to jumpstart us and kick us over the 1750. Between 1750, we had room to run to 1775. Obviously, any close in the after hours over 1775 could have probably pushed us into the 1829 resistance here at the 50-day moving average pre-market, and then depending on the volume and so forth, it would have went from there. However, $15.38 is what we're at in the after hours. So not only did we break below the 5-day moving average, the 20-day moving average, the 10-day moving average, we are currently sitting below the lower Bollinger Band here. So that takes out 1, 2, 3, 4, 5, 6 days of price action here. We're currently below all of these channels here. That does not look good. Okay, that does not look good because we're not going to have any firm support into the $15 area. This 15 to 15.50 area is going to be where we're going to find support. So if I just draw a trend line here, kind of showing, where possibly we can, find some support, it's down here where we touched 1, 2, 3, about 4 times here. This bottom of 1490 seems to be a little bit of support. So some of you guys who are holding the stock up in the $17, $18, $19 area, I don't really know what you're expecting. Okay. If you have plans to hold this for the long run, meaning that you don't really care what the price is doing on a day-to-day basis, then that's fine. This video is not for you. You're not really a trader. You're more of like just an investor, a holder, someone who's looking to swing it long term. That's fine. You're not worried about this. You believe in the stock, it'll come back, and so forth and so forth. So if you are looking to make a quick buck on this thing, okay, and you thought that you were going to make a quick buck on this thing, we have to reevaluate the situation. So we are going to have some hard support down here at $14.50. That's going to correlate with the linear regression line down here, this whole bottom row here, the lower Bollinger Band sitting down here. Also, we have all of this price action that's sitting here, $14.90, $15. Let's see what we do in the pre-market tomorrow. If we're down here in this $14 area and we get this bounce, so we come down, we sell off, and we get, 1, 2 green candles in the pre-market here, you could take your shot at it. Whether your price is $16, $17, $18 average, maybe you can average down a little bit if you believe in the stock long term. If you're someone who's looking to, make a quick trade on this, you don't really plan on holding this longer than a month, I would not average down. I never recommend to average down because the only time you average down is if you're an investor. Investors average down because they don't care about the daily moves. They're only concerned about the long run. So in the long run, you want to buy the stock at the cheapest price. Okay. If you're a trader, you also want to get the best price, but you don't just want to buy the stock anywhere, meaning that you don't want to buy it in the middle of a channel. You don't want to buy it in the middle of a range. You either want to bounce this off of support or you want to buy breakouts. There's no in between. Okay. If you're a trader. So as a trader, our breakout was at $17.50. That's the break that we needed to trade this intraday or short-term swing trade with a price target in mind of about $18.31. Obviously, any close over $18.30 gives us another channel to $18, $19, $19. Okay, so being that we are not in that direction, now we don't just want to buy the stock randomly in here because we've already been sitting in the stock long enough. We don't want to keep sitting in the stock losing money. So either this gets down to $15 and you load here, or you let it come down to $14.50. There is no in between. It's $15 or $14.50. It's not at $15.79. It's not at $16.42. It's not at $17.06. It's nowhere in here. It's 1, 2, 3, 4 times that we touched, and this has acted as support. It's $14.90, $15, or a breakdown and get a bounce off this support down here at $14.50. Here's where things can get tricky. If they continue to sell the stock off below $14.50, that's where you're going to have some problems, because after that, there's no more support on the stock going all the way back down here to 12, which is taking us all the way back down to January. So here's my best advice for anybody. If this starts to lose $14.50 and starts to build below 14, 14.20, 13.90, you need to get out and cut your losses. There's no sense in holding a stock that you're just going to continuously lose money on when you could easily get into other plays that are moving. Okay, there's stocks that are moving in dollars, and we're fighting for 50 cents on a stock with this stock here. Either it was going to break 17.50 and we had potential to make a point move, which is fantastic on a stock like this, or we need to now buy this off support at $14.50, $15. We have to see what they do tomorrow with the stock in the pre-market. We need to see what the volume is like and how we interpret the sell-off of earnings. Okay, so I hope that kind of helps everyone out. Don't be so antsy. Don't be so impatient. These stocks are not going to move on you dollars. You're not going to be worried. You don't need to be too concerned about, if I don't buy it today, this thing is going to be at 25 tomorrow. It's not going to work that way. And if it does, well, then you know your levels, right? I'll just give everyone a general example. I think everyone has so much FOMO that they're going to miss out on the big move that you guys buy at all the wrong entry spots. If this is going to make a big move, it needs to break 1775. Buy it at 1775. If this is going to make a big move, it needs to close over $18.31. So buy it at $18.31. If this has any chance to run back to $23, it needs to break $18.90, $19. So buy it at $19. There's no sense in buying it down here if it's not broken out yet, which means that you can buy down here and we can chop around another month, 2 months, 3 months, 4 months. And now your money is just sitting here, versus put that money in that liquid capital into another stock that's either breaking out or bouncing off support. Make some money in the meantime until this confirms to the upside. But since we're trending back down, let's see if we can bounce this around 15. Let's see if we can bounce this around 14.50. I think this would be a good area. I am not a financial advisor. I am not, a hedge fund guy. I am not nothing. I'm just a guy who breaks down charts. I'm a swing trader. I'm a day trader. That's it. But these levels mean something. So $14.50, $15. If we lose $14.50, just get out of the trade. Just get out altogether. There's no one telling you need to hold it if it starts breaking below $14.50. Okay.